Okay, I don't need 2 microphones. I just need one. Okay, I just figured I'd tell you like a funny story that happened last night about my son. Why Mike is just sitting here and we're waiting. So I know that I'm old, okay, but my husband is older. He's 11 years older, okay? So he was on dad duty yesterday, morning and night. Like he even ordered pizza. And I was like, A++. I had to make no decisions nor care for our child until 6 o'clock last night. So I was like, you're a good man. This is why I married you. But Jesse goes, do you want to know what your son said to me today? And I was like, of course I do. What'd he say? Because he's now started roasting us in like the cutest way possible, but it kind of hurts. It hits you in your soul. So he looked at Jesse and he goes, you need to get up. And Jesse was like, buddy, I'm old. It takes me a minute. And he goes, old man, get up, please. Because I've told him, we need to say please. Like that makes it, softens it. And he's just like, please. And so then whenever Jesse was telling me that last night, I'm just laughing. And then Jesse's like, yeah, the other day he got mad at me. And I go, why? And Marshall, before Jesse even got to tell me, he goes, my dad has no hair. And I go, he doesn't. He's bald. And so it was funny because I looked at Jesse and I go, so how did this happen? He goes, well, he woke up really mad and he was sitting on the couch and Jesse kept going, buddy, do you want to come sit with me? No. And like gesturing, like real big, like, no, I don't want that. And Jesse goes, okay. And then he goes, I left him alone. I gave him a minute. And I'm thinking, oh, you just woke up. And he said 15 minutes go by. And he's like, buddy, do you want some chocolate milk? And he goes, no. And he goes, why are you so mad? Your hair's gone. And it's weird. And so, like, we're going back over this again, and I'm, like, dying laughing, and I'm just going, and I looked at him, I go, your dad hasn't had hair your whole life, which is only 3.5 years. And I said, but I've actually never known your dad with hair, and I've known him 16. So I was like, some people just don't have hair. And he just goes, so weird, and just stomped away. And I'm like, you just need to not get mad about stuff like that. So something's going to happen in life, and I'm going to be like, remember that one time you got mad about your dad not having hair? Yeah, it was a thing. Okay, so now I think I gave you guys enough time because I see no phones out. Okay, then it's Michael's turn to talk about new legislation. Okay.
Thanks, Stacy. I don't have any adorable kids stories to share with you. My kids are 11 and 14, and they don't do adorable things anymore. So I'm not going to tell you all of the things that happen at my house. But I do love, I mean, it's funny. Stacy tells these stories at conferences, but she also shares them in the office. And we all love hearing Marshall's stories in the office just as much as you folks do. I will say with the suction cup story, I didn't notice it at first, but then after I did, I just couldn't stop looking at it. It was so difficult not to look at it once I had seen it. All right, so we're going to talk about everybody's favorite subject, which is the Indiana General Assembly and what went down at the State House this spring. You've heard a little bit about this already. We've talked about SB 92. I know Stephen talked about the Department of Local Government Finances bill, which is only sort of the DLGF's bill, yesterday. We're going to go back through some of those things again today. Some of it may be repetitive. I know you're going to hear from the public access counselor right after I talk. Again, some of this might be repetitive. I don't know what her content is or exactly what everybody else's content is. So if it's repetitive, I apologize, but you guys will get a thorough understanding of what happened. Of course, I've got to give you a couple of quick disclaimers. While I'm going to talk about this legislation, I am not your lawyer. You have different lawyers. If your lawyer disagrees with me, you should probably listen to your lawyer and not me, or have a conversation about how we disagree, because I cannot give you binding legal advice. Also, please be patient with us. We are still figuring out what some of these statutes mean. There is a lot in some of these bills. When I think about 270 and how big a bill that is, when I think about pennies, when I think about SB 92 and 1210, there's a lot we're figuring out. So our guidance may continue to develop as the months proceed. Look for bulletin articles. If you have questions about things, come and ask us. We're always here to help. Also, as we go, I think this is obvious to everybody, feel free to put your hands up as we're talking about individual bills. That's probably easier than coming back to them after the fact, so interrupt me. I'm very used to being interrupted. Okay. Yeah.
It's not me.
That's true. It's not Stacy. It's all the people in my house. So, HB 1001. So we're going to start right here with building and construction fees. This deals with planning and zoning. So it's going to have some limited application. It's going to apply really just to cities, towns, and counties, but that includes you guys. So this creates a new statute, 3672.3, and it applies to any fees related to the approval of an application for construction, reconstruction of residential, commercial, industrial, or any other buildings. It also applies to fees for approval of an application related to zoning, development, subdivision, classification, or reclassification of land. You guys, that is a really broad subset of planning and zoning fees. I used to do planning and zoning pretty intimately in my last job. I don't know what fee isn't covered by this statute. You're going to want to talk to see if there are any planning or zoning or building fees that aren't covered by the requirements of this new law. I don't think there are any, but you may have some creative attorneys at the county level who can find some fees that are not covered by these new fee requirements. So get an opinion on what applies. You know, when I think about rezone fees, PUD amendment fees, primary plat fees, secondary plat fees, right-of-way vacation fees, letter of zoning verification letter fees, all of these things that planning departments do, building departments do, I think they're all covered by this statute. But check with local council, see if they agree with that as well. Okay, so what are the rules? Well, the first rule is that there is going to be a new statutory fund or funds for these fees. We are still debating at the State Board of Accounts whether or not the statute mandates multiple funds or a singular fund that all of these fees will go into. Whatever fund or funds are created, we are going to mandate them statutorily, so you will see that come out at some point. Stacy and I have had a couple of conversations about this. Obviously, it impacts cities and towns as well, so we're having those conversations with the folks over cities and towns to make sure that the guidance that we provide is consistent. I would look for guidance on this to come out very, very soon in terms of whether or not we're creating multiple funds or a singular fund. You haven't heard anything final on that, have you? Yeah, so we're still waiting for some guidance. The new fund or funds that are created in which you will place your planning and zoning and building fees, they are non-reverting, so any dollars that go in there stay in there permanently, and you have the code citation there. And they have limited permissible uses. So all you can do with planning and zoning and building fees from this point on, or from July 1st on rather, is to reimburse costs actually incurred by the unit in processing an application, inspecting and reviewing an applicant's plans, and preparing a detailed statement for the applicant. Again, because there are some restricted uses, I would recommend thinking about what you do in your planning and building departments and thinking about what tasks can be covered or what these particular fees and this new fund or funds can support within those departments at the county level. There are some rules about these fees, right? The fee may not be more than is reasonably necessary to cover the cost to the unit for processing an application, inspecting and reviewing an applicant's plans, or preparing detailed statements for the applicant. So when you're setting these fees, be thoughtful about making sure that they are reasonably related to the cost to the unit for this particular activity. Now, when I think about that, that feels like a very familiar rule, because that rule already exists in the Home Rule Act, right? Any fees that are charged by a unit of local government has to be reasonably related to the cost that those fees support, right? The particular program that those fees support. So that's kind of a recitation of that same rule. It's highlighted because we have it existing in the separate statute, and it's front of mind because it's a brand new statute. But do make sure that you have some reasonable basis for setting those fees related to the costs that the county is going to incur. There is a time window here So if you have fees that are stale, that are too low, think about increasing those in the near future, because you're going to run out of runway to do that come December 31st. So if your fees are stale and they are due for an update, sit down, talk with your county attorney, talk with your planning or building departments, and decide whether or not an increase is appropriate and what that increase ought to be. When you're doing increases going forward, after December of this year, you can only do them in very limited ways to these fees. First off, you can only do increases to these types of fees once every 5 years. You cannot do them on a more regular basis than that. When you are doing increases, the actual numerical increase in the fees is extremely limited, right? It's limited by the CPI by statute. So you have to look at the consumer price index increase over the preceding 5 years when you go to increase these fees, and you have to peg your increases to the CPI. You cannot increase it by more or less. That's why it's so important in the interim to look at the fees that you're charging now and think about whether or not an increase today is warranted before you run out of time to adjust those fees if they're too low. Any questions about HB 1001? I see one in the back over there. I see one right behind you, Stacy, as well. I know our cities and towns, we haven't heard as much from counties, but cities and towns are really, they're kind of freaking out about this bill, just so you know.
So so if we evaluate where we are with our fees, and the county decides that that it's in our interest and it's acceptable to raise our fees, we have by December 31st to make that decision, and then those take effect on January 1, or?
You could have, the effective date at the county level is up to you guys. It's just after December 31st, you run into this 5-year rule, right, where you're not allowed to increase your fees except in 5-year increments. So I would think, like, look at your fees, discuss it with local council, whether or not they think your fees are compliant with the statute, or if they're too low, or if they're too high, because there is this rule that the fees have to be, only that which is reasonably necessary to support all of those activities that your planning departments do in reviewing applications, right, for all of the various permits that they issue.
All right, so the statute is saying that after December 31st, 2026, if you wanted to raise fees, you would have to wait until December 30. You'd have to really wait until 31 to do it.
Yeah, that's correct, and they would have to be tied only to the increases in the CPI, right? So you can't just say, oh man, we have been charging way too little. Our planning department costs $2 million, right? And the plan review part of that is $1.5 million, and fees are only bringing in $250,000, right? So you can't. The CPI is all you can do going forward.
So if before December 31st we evaluate this and decide that our fees are way too low, we have the room to bring them up to a more market.
To raise them to a rate that is equivalent to that which is reasonably necessary to support those programs.
Okay.
That's the way I read the statute. Again, this is complex enough, and this is the sort of thing that may be under a microscope right now. So definitely get an opinion from your own county attorney on this. Talk to your planning departments, your building departments about that as well.
So we have time to bring them up to, it seems like we should have time to bring them up to a rate that's acceptable or competitive with the market now, and then later it'll be just based on what the statute says.
Correct. Okay. Going forward, as long as these rules remain in place in Indiana code, fee increases are going to be only done once every 5 years and only in an amount, relevant to the CPI. Again, that strikes me as it's difficult, right? Because when I think about the way planning departments work, right? When I was working with a planning department back when we were going through the recession, the number of applications that were coming in was, it was none, right? Nobody was building, nobody was doing anything. Everybody was scared to build anything. And then, when the economy gets better, you start getting flooded with all sorts of applications. People want to build subdivisions. They want to tear down old buildings and put new ones up. So these things come and go, right? And so the amount you have to pay personnel in a planning department when you need more planners and more folks to do plan review goes up sometimes, right? To the extent these fees support those folks' salaries, those salaries fluctuate over time, right? You no longer have the flexibility to adjust your fees in accordance with those natural fluctuations. Now you're just sort of pegged to whatever you had at the time that this goes into effect. So.
All right, thank you for clearing that up.
It's going to take me a minute, so one moment. I didn't wear super comfy shoes today. If I can do a little jog.
It's a big room.
Since right now, planning commission fees and BZA fees go into county general to back up their budgets that are coming out of county general, can we move those budgets to this new fund?
July 1st, you'll have to, right?
So
That'll
the
be
budgets,
required.
their total budgets will come out of this new fund?
I don't know about total budgets. I'm not gonna again, you'll have to look at, each county is gonna be different, right? So, but you will have to create the new fund. The new fund can only be used for the permissible uses, right, that we went over, which is going to be a lot of what your planning and zoning department does, right, and your building department
Okay,
does.
because that's going to take away from county general is what I was thinking.
It will, right? You can't put it in county general anymore. That's correct.
Oh, 1 minute. Oh, 2. Okay. Angie, I saw you first. Oh, 3. Okay.
Yeah, and I think just to like dwell on that point for 1 second, I think that was the idea. I think there was some concern. There was some concern from certain lobbyist groups that, in fact, what was happening is local governments were kind of, I don't know, I'm going to use certain, they were gouging them and charging way more than was necessary and just using all that extra huge amount of fees to support other functions of counties and cities and towns. I don't know if that was actually happening, but that was the concern, I think, from certain groups of folks that led to this legislation. So.
Okay, so my question is, going forward July 1st, we're going to have to set up a budget for this new fund. The money collected so far this year, will it stay in county general, and then starting July 1, we'll start receiving money into the new fund?
That is how I read the statute, correct. Yes, the statute is not effective until July 1, and so you wouldn't change anything until July 1. That is correct.
Okay, thank you.
Michael, did you have your hand up? Okay.
Yeah, our county council decided to give out raises after our budget on a couple of departments, including the planning department, and they felt that $15,000 was going to come out of one of these funds. So now, I guess we're going to now have to fund it a different way, is what I'm hearing, because it doesn't appear that this is a possible for a department head to be
Or
reimbursed.
if they've done that increase and you can increase fees as a consequence of those salary increases, right? That may be the sort of thing that you could consider doing. Again, but think about doing it fast, because otherwise you're going to run out of time. So.
Oh, no, I get it. I
Yeah.
appreciate the.
So it's the auditor's responsibility to pursue these increases in fees, or is it the department head for DCD?
It is an issue broadly for the county. I would think it's probably more within the commissioners and council members and planning and building department space to think about it. You guys should be aware of it because these are fiscal rules, the rules related to fees. But if in terms of thinking about policy, it would seem like it's more important for the commissioners, the council, and any planning and building departments to really be justifying to the public and to the community why it's necessary to increase fees or why it's not necessary to increase fees, or the different ways that their departments may be funded. Now, there may be a variety of opinions in this room on that. That's the way I see it.
Okay,
So,
and then as far as the 5-year increments, is that across the board for all fees of the county or just these building
nope,
fees?
just these fees, only these
Okay.
fees. So,
And
yep.
then going back to what he mentioned, it would be potentially you could pay a part of somebody's salary out of this fund and a part out of maybe county general.
That is the way I interpret the statute. Again, I would, if I were doing that, again, I'm a neurotic person by nature. So I would want to, like, if I said, look, we're going to support a certain of it through these limited uses down here, I would want to go to my planning director and say, zoning compliance officer A, I would like to know that they are spending 80% of their time on issues that are on processing applications and doing the things that are permitted by the statute if I was going to pay 80% of zoning compliance officer A's salary from this fund. And I'd want to write that down. Again, I don't know if that's necessary, but that's just me wanting to always over-document everything. So,
Our commissioners, due to the wording of reimbursing costs, were thinking that we were leaving the building department planning in the general fund, and then we would bill this other fund for costs incurred like on a quarterly basis, whatever, and then we would reimburse the general fund for the cost of those budgets.
yeah, I hadn't thought about it that way. I don't know if you thought about it that way, Stacy. See, this is why new legislation is always so interesting, because it's new.
I think it could work, but I think it could work. My only thing is, if they do that, I don't think who wants to see the information in this fund will see what that's being spent on, because they're going to be seeing the reimbursement from the fund. Does that make sense?
Yeah.
So I think that the way that this statute was put into place and the people that wanted this was to pull out those, put them into funds, however they decide to do it. And then you can see more transparently what the fees they're collecting for these certain things are, and then how they're being spent at the county. It could work that way, but I don't think that wouldn't, your information would look completely different from other counties if they're not doing that. But that would be one way to do it. I don't know if we could take exception to that. So that's something we might need to discuss, because I don't think it's something Mike and I have actually thought about in discussions with our general counsel.
Yeah.
So it's a very good point, because you bring it up, a lot of people are like, that's easier. It really is, in a sense. Instead of putting it all in this fund, because are the fees really going to support certain things? It's kind of hard to shift a budget into this, because you don't know if your fees will support all the things you need to. Monroe County's like, yeah, we're with her. Because this is a lot of shifting if you do that. So I think we need to think about that, because it's something we hadn't thought about.
Yeah, and see, this is one of my favorite things about coming to conferences like this and listening to all of the really smart, thoughtful people who are in the room with me. Like, that hadn't occurred to me. I haven't really thought about it from that perspective. Were other counties thinking about doing it that way? Is that the way this statute had been read elsewhere? Yeah, so that's great. Yeah, we'll have to spend some time thinking about that, so thank you. Okay.
And he thought that he was just going to go right through these. That's so funny.
I'm gonna
Sorry,
use-
I reached out to our area plan director. She had a question about whether or not this applies to special exception fees, variance fees. Is that considered related to?
So again, I'm going to point you back to, this includes a permit fee, an application fee, an inspection fee, or a similar fee by any other name. You're going to want to think about, get a legal opinion if you're having a hard time figuring out what fees fit under this statute. It appears they were aiming to capture everything, and it's hard to get almost any fee. I mean, I was thinking about right-of-way vacation fees, right? Would those be covered by this? I think they would. But get an opinion on that. It's really hard to see any of those fees not fitting within this bucket. But
Our area planning department came to us a couple months ago, and they went to the commissioners and already established a non-reverting fund for this. We didn't know in the auditor's office this was even coming down the pipes, and they didn't tell us any of that. But they're wanting to just take, and they're doing it now, putting all the fees into this non-reverting fund, and want to build that up for a year or two before any expenses or anything comes out of that.
well, I mean, I don't know that you couldn't do that. You've created a local fund by home rule ordinance, so a home ruled fund. We are going to be establishing a statutory fund where you're supposed to place these fees after July 1. So I think that's probably going to change after July 1. But I don't know that you couldn't do a home ruled fund in the interim. I can't see why you wouldn't be able to do that. Can you think of a reason, Stacy?
No, I think they could if they saw it coming, and they're kind of getting ahead of it. However, is council going to let the fund just sit? if it has revenue in it. So that's my only argument is they can wish that it's going to sit there. They can't guarantee that it's not going to be budgeted unless they discuss with council. So
Did we have one way over here that I missed at some point? Okay. Sorry to I'm making you walk the full length of the room, Stacy.
it's okay.
so-
They're really cute shoes, okay? They're really cute, and they're not that uncomfy. But I swear, if I fall, Jackie, you have to cut that out, okay? Just have to cut it out. Okay, I lost the hand. Okay. She thinks just because she got her settlement approved, she can ask questions. Look at her.
I'm sorry. Some of them have already been answered. Our county general fund is getting ready, or they were getting ready to put our building department into the county general because the fees do not support the department. So how are we going to transition the split? I mean, we were ahead of the game too. We literally just adopted new fees at the last commissioners meeting because we knew this was coming. So it still isn't going to be enough to support the department though. So how are we, I guess I just don't understand how we're going to split from using the general fund to compensate the differences in the building fees for the rest of it. And how would we split it out?
I really-
wish, yeah, you want to
No,
go say, I wish I had an answer for that.
Yeah,
Don't
my
really.
brain is just thinking that unless your fees, again, they have to be reasonable, right, Mike?
Correct.
I don't know how creating a reasonable fee can really support a lot of the activity. So I can't see how this fund will really shoulder a lot of a budget. So you're still going to have to split those costs unless your fees, you guys somehow determine that reasonable is a lot of money. So, I mean, that's just my thoughts, but I think you're going to have to split the budget.
I think that's right too. It would be hard to argue that the limitations that are placed on the use of these fees are going to support every single activity within a planning department, right? There are going to be other things that planning departments do, like rewriting your zoning code. Things like that are not going to be covered by these fees. So you're going to have to think about some subsidies besides just what these fees are paying for in terms of planning. Okay, should we move on from HB 1001? I don't know, I should see what time it is. Okay. I'm going to skip over 1044 because it doesn't really apply to counties. We're going to move on to 1161. This is a bill, it was titled Local Government Personnel Matters. It relates to really HR stuff at the county level. It's specific to counties. There's some mandatory requirements now. Counties must adopt and maintain an employee handbook. Goodness, I hope everybody was doing that already because you were supposed to upload those for the SBOA to see. All county employees have to sign an acknowledgement of your handbook. Again, I hope that was already happening. I'm sure it was everywhere because insurance companies would probably freak out if you weren't doing that. Results of employee evaluations shall be maintained as part of the employee's personnel record. Again, these are intuitive, basic HR things that you should have been done. And then also elected county officers get to have final authority over discipline for employees under their supervision, except as otherwise directed by law. So that's explicit in code as well. You see the citation on the slide. Now there are notable exceptions to this particular statute. I think the idea here is that the General Assembly wanted to make explicit those departments that are carved out by a series of court opinions related to personnel manuals at the county level. So here again, we're talking about the familiar departments: probation, courts, judicial officers, prosecutors, public defenders' offices, and community corrections programs. So there is a carve out there. Take a look at the statute when you have a minute. There is also a change, sort of a change, regarding the county administrator. A new subsection was added. I don't know, how many counties have county administrators? I assume a lot of you guys, yeah. So if you have a county administrator, there's a new subsection in that statute that indicates that the county executive can set the salary of the county administrator, but that the council can set salary parameters. So they can put a range out there at the council level, but the commissioners get to select the final salary within that, the range that's paid to the county administrator. I assume that may be the way it was happening already, but that's explicit in code right now. All right, municipal advisor contract upload. So here we are going to venture into Anna's bill from the DLGF. She authored almost all of this bill, so if you hear anything that you're frustrated about, she's right back there at the back of the room. You can go complain to Anna. That's a joke, of course, because every year DLGF writes a tiny little bill and then 500 different members of the General Assembly add their own special provision related to local government to their bill. So most of what I'm going to talk about here was not part of any initiative directly from the DLGF. You may have heard some of this already from Stephen yesterday, but we'll go through it again anyways. Municipal advisor contract uploads. There is now a requirement in Code 511419 that every single municipal advisor contract has to be uploaded to the DLGF's gateway site. It also has to be published in a prominent place on the county's website. What is a municipal advisor contract? By law, it's a contract related to any non-employee who provides advice on behalf of or to the county concerning financial issues. So here we're going to talk about contracts with people like Baker Tilly, certainly a law firm that's providing financial advice to the county. Any contracts like that have to be published on your website and also uploaded to the DLGF gateway site, regardless of the cost of the contract. There's no $50,000 threshold for these ones. You can see the timing there. Really, any contracts that are effective or any contracts that you enter into, they have to be published within 30 days of execution. That's really the important one, is that bottom timeline. 30 days of execution, that's your deadline for getting them on your website, getting them over to DLGF. TIF neutralization. The county auditor shall submit TIF neutralization forms to the Department of Local Government Finance no later than July 15th of each year. So this is a July 15th deadline to complete that. It's in code, so right there, that's the citation. I don't know that it was in code before. I don't know if it's a new deadline, but I don't think it was in code before, just to be clear. I heard somebody say, is that new? It's not new, but now it's, oh, go ahead. Anna wants to say something.
She doesn't want to, but she's gonna say something.
Prior to this, the deadline was technically August 1st, which obviously is the same due date as the CNAV. So the change is to create separation between TIF neutralization and the CNAV deadline.
It's so wonderful having somebody in the room who knows more than me. It's great. So,
Pause. Hold on.
okay. Excise distributions.
Pause. Nope. Pause.
Oh, pause. Sorry,
Pause.
I didn't see this.
And this might be for Anna, I don't know, but so, we submit this, the auditor's office, but we're waiting on the assessor's office and a financial advisor for Baker Tilly. We use Peters Franklin. Are we getting dinged when it doesn't get submitted timely because we're waiting around on all these other people who, do they have deadlines?
This is an excellent question, and one that I will be fielding quite a bit, I'm guessing, this year. You all probably have my email. If not, come find me and I will give it to you. I did forget my cards, so you will have to deal with just writing it down. So yes, yes, there are deadlines. For instance, the assessor roll is supposed to be done by July 1. Another thing that was added into 1210 is a little bit more emphasis on that July 1 roll date. If the assessor misses it, they have to follow the same procedures that now auditors will have to do if the TIF neutralization isn't done on time or the CNAV isn't submitted on time. They'll have to let us know and let you know why the roll wasn't done by July 1st. So that one, the July 1 has always been the due date, right, for the roll from the assessor for real and personal property. It's been, well, not maybe always, but for a long time. So that one is being emphasized more with 1210 changes. There is now kind of a, not penalty, but there's more stringent guidelines on that July 1 roll date. The July 15 is obviously moved up. Yeah, bless you. I don't know who that was, but I hope you're okay. And if for some reason an RDC can't do certain things, like they have now new rules about the pass-through letter that is supposed to be to you as well. If the July 15 TIF neutralization cannot be made, there is a letter that can be submitted to the department, as in me, letting me know why you were not able to do it, and that is one way to continue moving forward. If you want to obviously come find me after this, I will be here all day and we can talk about it more, and I'll pull up 1210 itself.
I don't even know that it was our assessor so much as for my county, it was Baker Tilly. Yes. I waited on Baker Tilly till I thought I was going to kill him.
Well, murder is bad. Don't do that. Yeah, let's, but we can keep. Well, murder is always wrong, okay? Murder is frowned upon. Don't do that. That part could probably stay in the recording. Murder is very wrong. No one do it. I'm totally stealing. Yes, your questions, your concerns are valid. If you guys have more of these, I don't want to take up more of Michael's time. Michael, Mr. Walker. But come find me.
Yeah, thank you so much, Anna, for adding that. I mean, it's a firm requirement. So, again, I would hold the statute up to Baker Tilly, and I would jump around and scream and yell and say, "Come on, this is required by the General Assembly. Do your job, please." That's as much as I can give you. So, I don't know if that helps, but excise distributions. Fred talked a little bit about this yesterday. Okay, so. We now have this any fund of the unit language related to recreational vehicle excise, aircraft license excise, auto rental excise, watercraft, heavy equipment, vehicle sharing, and then the big bucket of money, which is motor vehicle excise, right? Which is a giant pot of money. You can now deposit that in any fund of the unit. So what does that mean from SBOA's perspective? This guidance should look familiar, the SBOA guidance on this, because it's the same as we provided with FIT and CBIT. If you are going to receipt excise distributions into any fund other than the general fund, we need to see a resolution, an ordinance, or at least a record of a vote reflected in minutes that indicates what fund the county is going to put those excise distributions into, where you're going to receipt those, right? Again, it has to be reflected in writing somehow if you're going to stick them somewhere other than the general fund. If you put them in a fund that has restricted uses, when we come to audit you, we are going to expect to see any expenses that are paid using excise funds, any disbursements to be in accordance with the restrictions associated with that fund, right? So if you don't do anything, we're going to expect to see them go into general. If you want to put them somewhere else, write it down, okay? Does that everybody follow that? Is that familiar to everybody, I hope? Great. And it's going to be done by the legislative body as well, right? So that's going to be the commissioners in most cases. I hear a buzz. I see a hand. So I don't know. Do people have questions about this?
So currently in Jackson County, we don't have a wheel tax. It's been a subject of conversation. Is a wheel tax considered an excise tax? Okay, it's something different.
Different
Okay,
thing.
thank you.
So, yeah. Okay, moving on. 1210 had some information about the publication of notices. Again, I am very self-aware of the fact that I'm going to talk a little bit about some things that are related to the Open Door Law and the Access to Public Records Act. The next person up after me is the public access counselor herself. So if you have lots of detailed questions about these things, I'm probably going to defer them and ask you to ask her because I don't want to get too far out of my lane. I just want to tell you about the things that I identified in code that are going to be important for all of you to know about. So, publication of notices. This was a really, really significant change from my perspective that was added at the very last minute into HB 1210. Notices may be published, and note the effective date here. We're talking about July 1st of next year, so July 1st, 2027. They may be published either in a newspaper print edition, a newspaper electronic edition, or, and this is the big one, on the political subdivision's website. So that means that paying for publication of notices in newspapers, that is not going to be a mandatory requirement come July 1st of 2027. This has been an initiative, I think, of various local government lobbying bodies for years and years and years. I think that it has finally come to fruition. We'll see if it sticks. This doesn't alter any timelines for you guys. Sorry, did somebody ask? I hear buzzing again, so. Okay, so this is a big change. So if you're doing notices by publication and they have to be published in a newspaper, that's going to be the sort of thing that you can alternatively do on your website beginning July 1st, 2027. I see a hand way in the back, Stacy. I think it was, oh, sorry, way over there.
I'm so sorry.
No,
I'm coming.
it's okay.
I was trying to
She's
answer
trying,
you know,
she's
it's
trying
funny.
to do work, and
Yeah,
I'm
some
interrupting
people in
her
this room
constantly.
keep sending emails to us, and I'm just like, hold on, we're with you. Just ask us. Well, I think I already. Do you got the answer? I guess.
Just go ahead now.
Okay, my question is I publish the tax rates and the abatements. Is that part of this?
So this is great because I don't know yet. The way that I read the statute, again, this was a very late addition, right, to this bill, and it's one that we're all sort of digesting, and also the State Board of Accounts. Well, we care that you follow the publication rules. What is covered by this particular statute probably is going to be something that's decided by the public access counselor and not by our office. We are going to verify that you're following those rules, but in terms of interpreting it, I think that's probably not going to be exactly something that's done by our office. The way I read it, I think the answer would be yes. I think it applies to anything that is required to be published in a newspaper. That's the way I read it. But again, very new, still getting guidance on what is covered, so take that with a grain of salt. Okay. Still working through HB 1210. It was an absolutely massive bill, in case you didn't know. One of the things that got a lot of attention was the delayed implementation of the local income tax regime. The new regime has been pushed back 1 year, right? The previous timeline was that your existing lit rates would expire at the end of 2027. Now it's going to be the end of 2028 with implementation of the new regime during 2029. So that's the new lit structure. I don't think I need to dwell on that. Okay, HB 1210, Tourism Commission membership. So this changed a whole bunch of different statutory provisions in the same way. To the extent you're charging innkeeper's tax and you have various commissions that are supported by this innkeeper's tax, the commission membership has now changed. These commissions now must include a member appointed by the city executive of each city within the county. There are a number of requirements associated with these commissions. This adds a new layer of requirement to it. So just make sure that if your county is not aware of this already and you're involved at all in innkeeper's tax stuff, that you are making sure the membership of your commission is updated by July 1st, 2026. Okay, still on HB 1210. I told you it was a behemoth. You heard David speak a little bit about municipal unit strategic task forces yesterday. I absolutely love this. I love this as much as I love community corrections trust funds not being trust funds in any ways. It's just amazing that we would call not a trust fund a trust fund. The same way, this MUST task force is entirely optional. You don't have to do it. You could do it or not do it. It's totally fine. Anything they do is just a recommendation. It's not binding in any way. So, but we call it a MUST. So, a municipal strategic task force is a formal forum for local governments to collaborate regarding local income tax distribution. So this is just designed to create a discussion between all the various units within a county that might be able to charge a lit rate. The county council gets to decide whether or not they're going to convene a MUST. So you get to decide that at the county council level. And if you want to convene a MUST, you can begin doing it as of a couple months ago. So as of March 1st, 2026. So you could maybe already be doing this in some of your counties. Is anybody doing this already? No? Okay, you've been advised to wait. I heard somebody say, just to repeat it. So that may be wise. I'm not going to weigh in on that, but you can do it if you want to do it. Who is a member of a MUST? One county council member and the fiscal officer of each city or town in the county, right? So if you have a lot of cities or towns in your county, there's going to be a lot of people from cities and towns and fewer from counties. I think you heard David say that yesterday. What powers does a MUST have? A MUST may negotiate and establish a local income tax distribution agreement, but only if there is unanimity. Again, when I read this, it does not appear to be binding. Again, I'm wary of the fact that I have the DLGF in the back of the room again, but that's the way I read the statute. If you get a different opinion on it, or DLGF issues different guidance on it, listen to them. But this is where we are with MUSTs. Okay, do people have questions about this? Anybody want to talk about these at all anymore? Okay. We're off of 1210 finally. So on to public records requests. Again, you're going to talk to the public access counselor after this, but there were some interesting changes in the realm of public records requests this year. So first off, the county is allowed to maintain an electronic portal for the submission of public records requests that requires people to submit a CAPTCHA, which means they have to prove that they're human. You're allowed to ask the requester to verify their physical address, and you are allowed to ask them to indicate whether they are Indiana residents, because there's actually, we're going to find out in a second, you're allowed to treat Indiana residents differently than non-residents for purposes of responding to public records requests. You are allowed now to decline a public records request if you suspect that it is data scraping or phishing. So you can say no to it. If you do that, you have to let the PAC know within 7 days, though. So also, you can collect a fee for processing a public records request if the requester is a non-Indiana resident or an out-of-state entity, so an out-of-state corporate entity. The fee has to be reasonably related to the cost of fulfilling the request. It cannot exceed 25 cents per page, and it cannot exceed $25 per hour of staff time spent processing the request. So this makes, I don't know if any of you ever had the, I'll say, pleasure of working on anything related to the Freedom of Information Act, which is like the Public Records Request Act, right? Like APRA, except at the federal level. At the federal level, you can actually charge for time spent fulfilling a request, right? Which isn't crazy. It's the same with third-party discovery and litigation, right? If somebody sends you a third-party discovery request at the city or at the county level and you spend 100 hours on it, you can bill the party that asked you to send them a bunch of documents for the amount of time you spent on it. So that's something you can do with out-of-state requests now. You can, however, waive the fee for out-of-state requesters if you determine that the request serves the public interest. You are allowed to waive it in limited circumstances. Again, I'm going to probably not take questions on that because if you have questions on it, I'm going to let you ask Jennifer or her team about it, all right? And you can also deny requests under new circumstances as well. I forgot about this slide. So the county can deny a request if the request is duplicative of a request that is happening as part of litigation through a request for discovery. So in civil litigation, sometimes in criminal litigation, right, there's a portion of that lawsuit that's called discovery, where the parties can send all sorts of papers to each other saying, I demand that you produce documents A, B, and C and answer questions X, Y, and Z. That's called discovery. If you send a party a request in discovery and then also send them a separate public records request for those same materials, you can just say, no, I'm not going to give you any of the materials because you already got them pursuant to discovery in the litigation. And then you can also give preferences to certain requesters, Indiana residents, requests that are civic or journalistic or academic in nature, as opposed to requests that are more commercial in nature. When you're fulfilling requests, you can shoot them up higher in the requestor order. And then requests originating from out-of-state entities or automated systems can actually go sort of to the bottom of the queue there as well when you're thinking about which requests to respond to. So that's 1360. SB 14, so on to the Senate bills here. SB 14 deals with wage assignments. So a wage assignment, hopefully everybody knows what a wage assignment is. A wage assignment is a way that a way that an employee can request that their employer provide certain portions of their wages to a third party. There is new language in Title 22 about wage assignments going to federal tax-deferred retirement accounts. So if employees want to do that and you have a local policy that says, we just don't do that, it's too much paperwork, it's too much of a hassle. If you want to make a contribution, you can do it after the money ends up in your bank account. Well, now you have to actually honor the employee's wage assignment. In those circumstances, you can't tell them no. So to qualify, the account, the federal tax-deferred retirement account, has to be in the employee's name, and it has to be under the employee's control. But there are not, normally to do a wage assignment, the employee has to request the wage assignment in writing and to sign it, and then the employer has to consent to it. That's not required in this case, right? So really the important part of that is the employer's consent. You have to accept this wage assignment whether or not you like it, so if that makes sense. Any questions about that one? Okay, SB 92. I don't really need to talk about this. I sort of just had this one slide here because it made me smile that we have a trust fund that's not a trust fund in code now. And then also I just want to make sure everybody understands, people keep telling me that this is Sheriff's Commissary for Community Corrections. No, it is importantly different. It is on the auditor's ledger, and it has to be appropriated. So it's very different than Sheriff's Commissary in those ways. I can't emphasize that enough. If somebody at the county says, no, this functions just like the Sheriff's Commissary account, it does not. It's importantly different, so remember that. Okay, SB 243. The treasurers just loved this one when we talked about it at the treasurers conference. This is the penny phase-out bill. So How many of you are running out of pennies? I guess I wonder how many counties are running out of pennies at the treasurer's office. I don't know. I think we're seeing people run out of pennies. And so they're starting to implement local policies on how to manage penny shortages. SB 243 adds a new code section, 5-36.5. It applies only to cash transactions. So transactions that are happening with credit cards or through an electronic funds transfer or in another format are not covered by SB 243, just cash transactions. It defines, for purposes of rounding cash transactions, state and local taxes. And state and local taxes are taxes, fees, fines, or any other amount required to be paid to the state or a local unit. At first blush, that sounds like it would cover just about everything, but there is some other language later in the bill that doesn't apply to things like payments to like a coffee shop, if you had something like that, or if your Parks and Rec department sells hot dogs at your baseball field complex. It doesn't apply to those types of transactions. It applies probably mostly to property tax payments that are going to be received by the treasurer's office. So for those sorts of payments, when they're made with cash, the rule is now mandatory that the county is required to round down the payment to the nearest 5 cents. So if somebody owes $100.07 on their property tax bill, and they want to pay with cash, they now owe $100.05 to the treasurer's office. That's the requirement. If there are multiple state and local taxes to be paid, each is supposed to be rounded separately. So if somebody has lots of parcels, each one gets rounded separately. Any questions on that right now? I know that's a big change. I see one here, Stacy. You're really moving a lot.
My Fitbit, though. None of these steps count.
My question about this penny phase out and rounding down is when someone's redeeming a property from tax sale. Does this still apply? Because they won't be fully redeeming it.
Does that qualify as a state or local tax?
It's
That's
a reimbursement of that, but
that is a great question. I am not going to give you an answer while I'm standing here right now. I'm probably not going to give you an answer on it at any point. I would inquire with local counsel or the smart people you have at the county to think about whether or not that fits within the definition under 5-36.5 of a state or local tax. But I do want to say this. You do have the option. So you'll see in a second on the next slide, you have the option of rounding transactions that are not state or local taxes any way you like. So you can adopt a policy to round it down to the nearest 5 cents, even if it's not required by law. This is the situation where it's required by law, so if that makes sense. So if you're unsure, you can do it and you won't be in any trouble.
So we actually calculate the tax bill. So are we calculating that on the parcels before it gets to the treasurer's office, or the treasurer is just accepting that difference and making that determination?
I don't know how you would know whether or not a person's going to come in and pay with cash ahead of time. So if they're going to pay with a credit card, the rule is they're paying to the nearest penny. They're paying that, if it's $100.07, that's the full amount they're paying. It's not getting rounded down. So I don't know how you would know it at that point. So I think you just have to keep doing what you're doing.
So we're going to calculate accordingly, and then they're going to have to deal with the difference.
Correct. And the concern, and there are quite a few slides on this issue. I'm only on the first one. I'm dangerous of opening this can of worms. I can see Stacy getting mad at me right now. The concern,
not mad.
The concern,
disappointed. No, I'm just kidding. I'm just kidding.
I feel like Marshall.
Yeah.
The concern is reconciling at that point, right? That's what we get into is what do you do? Your books aren't going to match, right? So you're going to think you're going to get $100.07, but what actually is sitting in the auditor's office is $100.05. And so we're trying to think of, we are brainstorming on that issue right now. Yeah. The effective date note is January 1st here, right? So you've got some time still, but okay.
I guess my question would be, so if someone's tax bill is $100.07 and they collect $100, then are they going to be writing up a correction of error to remove that 7 cents?
So it would be $100.05, just we rounded it
5 cents, yeah,
nearest nickel,
2
but that's
cents,
okay.
yeah.
That's just lawyers, we're very persnickety about stuff like that. That is a good question. I don't have an answer to you in terms of the way that will be handed. It is one of the things that has been discussed in the absurd number of meetings that we've had related to pennies, right? An unworthy number of meetings is doing various adjustments based on cash transactions. So, and Stacy, I don't know, you've been part of these discussions intimately. I don't know if you want to add
Guys,
anything.
Okay, so where it's at is, I think Mike said it, but we have sat down, brainstormed with every single director in our office, discussed this with our attorneys. We have it, all of our thoughts with higher ups. We have thoughts. We just don't have anything that I can solidly say, this is what you guys can decide to do. We plan on getting that guidance out. Treasurers brought it up in March, and we had a full discussion at their spring district meeting. And again, we totally understand. Kathy, you're bringing up great points. At the end, you're going to do corrections where they're not really errors, they're more of rounding adjustments. And again, your system isn't going to match what you're collecting. So the question is, I don't know have any software providers discussed this with anybody about what their software can do? Has anyone ever actually had a conversation regarding this yet? Because there are options that we could go with, but it's depending on what software can do. Yeah.
Yesterday, when everybody got up and ran out about the whole, yeah. So there was a discussion then with Lau and with Fred Van Dorp about this very issue. And so I know Lau is being proactive and looking at a way of calculating this. I just spoke with one of their representatives saying, why not just automatically put that, not that I wish more programming on our software vendors, because God help them, but to just automatically do it ends in 5 cents and leave it at that.
See, that's one of my ideas too. However, they just haven't.
Couldn't they do that now anyway? Because Lau rounds up, if it's under $5, they round it up to $5.
I think there are things, but we don't want to put everything on software. So we're trying to come up with something. Promise. It will be coming out within the next couple months, because you guys aren't the only ones having to deal with this. Utilities are going to have to deal with this as well. So we each have units that have this penny issue, and now this rounding issue, and the reconciling issue. So we're completely aware. Just Mike and I can't, that's why we don't have a presentation on this. I hope in fall, we're going to beat this with a dead horse, and we're going to talk about rounding. I'll put an hour in and we'll just go, okay? Because I feel like that's what we're going to need to do. And so we'll get there. Just Mike had to present on this, and I knew that this would happen because your treasurers are asking. Literally within the first 10 minutes yesterday, I had someone come up and say, hey, are we going to talk about pennies? And I was like, yeah, I knew this would happen. So please hold tight. If your vendors do bring it up to you and they start talking about options, I just want you to be receptive of what your software can do currently. I don't want to ask a software provider to do a whole bunch until guidance does come out, but it is important that you know what your software can do or what it can't do. So I would encourage those conversations. And if you guys learn anything, please feel free to reach out to Mike and I and let us know what your software vendors are capable of, because that does help us with helping you guys. So, Mike, I don't know if you want to keep talking about pennies or
I'm going to talk through very quickly what's in the statute, not SBOA guidance at this point. There are a couple of other things that are noteworthy in the statute. Again, I don't know if you guys track bills. We're sort of a little obsessive about it at the State Board of Accounts. But part of this bill contained a section on business entity payments. So this is all payments that aren't state and local taxes. And that part of the bill, as I've noted here, worked very differently, right? It said you can round up, you can round down, you can round however you want to round, for business entity payments, so non-state and local tax payments. At the last moment, a separate bill, a provision was inserted into it to make this optional, right? So you guys are going to probably maybe have some transactions that fit into this category. You can round them up, you can round them down, you can round to the nearest 5 cents per your local policy, but you don't even need to do this, right? It's entirely optional whether you do it, which means you can make a local determination with other types of transactions that aren't state or local taxes, how you're going to handle your penny shortage issue. There is guidance from the DOR on this issue, however, that says for sales tax computation purposes, they do not want to lose any of their money. So when you're computing sales tax, when you sell a hot dog, you got to compute it on the full $1.07. Then you would round down, if you're going to round down, after computing the sales tax amount. Then you would remit the full amount that you collected in sales tax to the DOR, right? And then you would realize the loss at the county level, if that makes sense, to the extent there's any loss for those couple of pennies that got rounded. So that's the amount that works. Again, that's the way that works for business entity payments. Again, though, that's optional language in that part of the statute at the very last minute. So again, statute not effective till January 1. We do tell local units that if you want to implement a local policy, to deal with your penny shortage in the interim, you can do that, right? So you could do that. This statute is not effective yet if you have some alternative way you want to handle cash transactions because you just don't have pennies to give to people. You can pass a local policy saying how you're going to do that before January 1. Again, one of the thoughts that we've had in terms of doing this is, are you legally permitted to limit the amount of cash transactions that you're taking at the county level so that you don't have to deal with rounding? Because again, rounding only applies to cash transactions. There's a little bit of a problem with that when it comes to tax payments because there's a federal statute that says, at least the way I read it, I think it's pretty plain, you gotta accept cash if somebody wants to pay their taxes in cash. You can't say no to that. Other types of transactions, there may be more flexibility, but taxes, I think you gotta let people pay in cash. But that may be one way to deal with some of the problems. Again, just one of those many thoughts that we've had when we've all tried to put people in a room together and think about how to deal with SB 243. So, okay, SB 270, I'll try to go through this one fast. This was a huge deal, a really, really big deal at the General Assembly this year. This is the Township Merger bill. I don't know if you guys followed this one or heard about this one. Originally, there were two different pieces of legislation to try to eliminate some townships. One sort of proposed a system where townships would be merged based on their size. So really, really small townships would go away. That bill ended up dying. What we have now is a point system for township mergers. So there are various ways to earn points. Earning points is bad. You don't want to earn points if you're a township that doesn't want to be merged. But if you earn once you earn 4 points, you are going to be required to merge with another township or a city or town. So 36-6-1.7 is the new township merger section. It utilizes the current existing township merger process, which is in 36-6-1.5, as the process by which these mergers will happen, although it adds some layers to it, and it does involve counties. So the timing for township mergers. Just real quick, I've listed a calendar of all the important dates here. I am talking to you about this as an SBOA representative. The Department of Local Government Finance really is at the center of this process. The General Assembly mercifully left us mostly out of it and put the DLGF at the center of it. So they are probably going to be issuing really important, significant guidance to counties on this. Look for that. But as you'll note, the very first important deadline on township mergers is December 31st, 2026. So that is the DLGF deadline for releasing those point totals. So each township that's going to be merged can see that it's earned 4 points or more. Between January 1st, 2027 and July 1st of next year, townships can appeal those points totals. Come July 1st, the points totals will be final. So we will know exactly which townships are going to be merged into other townships. By August 1st, 2027, the county commissioners in each county need to have a public meeting to discuss those mergers. That's a requirement. You have to do that at the county level. By October 1st of next year, county commissioners have to adopt a resolution deciding which townships are going to be merged. So again, that's at the county level. That's the commissioner's responsibility, but I would be really looking forward to seeing exactly how the DLGF describes this. I would anticipate some kind of memo coming out from the DLGF that's going to describe the details on that process. By February 28th of 2028, it's the end of February of 2028, that's the deadline for merging townships to submit information about their mergers to the DLGF, and all mergers of townships that are designated as required to merge have to be completed by January 1st, 2029. So those are the relevant timelines. Just real quickly, how do you earn points if you're a township that's going to get you merged? Well, there are various ways to do it. If you're not providing any township assistance or providing almost no township assistance, you can earn a point. If you're not filing your AFR with the State Board of Accounts, or if you're not submitting monthly uploads to the State Board of Accounts on time, you can earn points. If you're not conducting any elections, it's a pretty big deal, but you can earn points for that. If you're not actively managing fire protection or EMS service, right? Townships, they used to do a ton in Indiana, and now they don't do as much as they used to do, right? Their real big jobs at this point are providing fire protection and then township assistance, so that's why I think the General Assembly focused on whether or not townships were providing those services to the public. If you're not actively managing that, you can earn a point. If you're having your annual appropriations or tax levy continued by the DLGF because you can't get your budget submitted, you can earn a point for that. And if your certified budget is under $10,000, that's another way to earn points. So look for that list to come out from the DLGF in terms of how many points preliminarily have been earned by townships before December 31st of this year. That's the deadline. Counties do play an important role in the merger process, so the county executive has to conduct that public meeting to discuss the merger I mentioned by August 1st of next year, and then the county executive ultimately gets to determine under the process which townships will merge, and that's done by October 1st of next year. So again, more information on this process coming out from the DLGF. There is, just very quickly, I want to mention an alternative process for townships that have their borders 80% coincident with a city or town, and 51% of their population, of the township's population, also is inside that same city or town. When I looked through that, I found myself scratching my head a little bit, and I said, are there any townships that fit within these requirements? If there are, it's got to be a tiny number. I think there are a couple, but having identified which townships we're talking about, again, I don't know any details. I do not compile these lists, but knowing which townships fit within those parameters, I would be surprised if they end up having 4 points or more. So there is this alternative process in 36-1.5-4.1, but I'm not sure it's going to be applicable to any townships. But be aware of it. It's possible there is a process. This alternative process would be used in very, very limited cases. Any questions about township mergers? This is something the General Assembly spent a huge amount of time on this session. None. That is great. So last one real quick before I turn you over to break. Court security. SB 291, this was a bill that was prompted after a really, really horrific, tragic incident in Tippecanoe County where some judges were shot. The General Assembly, I think, quite rightly felt that they wanted to make it more difficult for people with grudges to locate court personnel who they might want to cause harm to. So it is possible that you at the Auditor's Office would get some requests related to SB 91 if a judge or their spouse or their children submits a request to you to have their personal information removed from the public record or redacted from the public record. You have to do it. The bill requires it, right? You have a very limited amount of time to do it. You got 1 day to process, to acknowledge the request, and then 3 days to remove that personal information about judges, right? So that people aren't showing up at their houses to cause them harm. That is not business days, that's calendar days. So that's a pretty strict timeline. Just note you might start getting requests like that. The bill is already effective, it's already law, so I don't know if anybody's getting requests like that, but if you do, it is legitimate. It's allowed by law. Okay, that is everything. I think we're already at 10:10. If people have questions, I'll be around all day, so come find me. Thanks.